I'm Ben Reppond. Welcome to my YouTube broadcast. Today is Wednesday, December 11th, 2024. The market has continued to go up. Pre-election and post-election, it has just moved up. Earnings have been strong. PE ratios have been strong. Doesn't seem like it's out of steam yet. It will at some point correct. I don't know if it'll be a small correction or a larger one, but right now all I can say is it's been a time to be invested, and we have been invested. So it's worked well for us. Okay, I'm going to get into the dashboards. This is as of last Friday, the 6th of December. Using the dashboard approach, on the green dots on the right, it shows if these indexes, or these ETFs actually, are above or below their 20-day moving average. There are 28 possibilities, including the last one, which is TLT, which is long-term government bonds. There are 28 possibilities. All but 3 of them are above their moving averages. So 25 out of 28 compared to 19 out of 28 the previous week. So in the yellow box, you can see that most of the indexes are positive, a couple are negative, and then you can see in the pink box the ETFs indexes that are how much they are, the gains have been, and if they are above their moving average or not. So you can see there are 6 out of 7 that are positive, and 1, which is bonds, is negative. So if you have a 60-40 portfolio, stocks and bonds, bonds is doing what it typically does in up markets. It puts a drag on the portfolio, and you may not be impressed with your portfolio. If you're not, it's probably because of the bond component. Okay, the next one is the sectors inside of the S&P 500. There are 11 major sectors, and again, measured above or below their 20-day moving averages to the right, green dot or red dot. That has dropped, interestingly. Usually these two, the last one and this one, move together. This time they didn't. So there are 31 sectors that are potential green dots, and out of 44, last week there were 39. So it's moved down, whereas the other one actually moved up a little bit. And you can see when you look at the last week in the yellow box, there are, of the sectors, some are very negative, and there's a couple that are very positive. So again, more negative than positive. Consumer discretionary, technology, those were the big winners. A lot of the old economy stocks or sectors were negative. In the pink box, to the right of that, are the rates of return year to date. So far year to date, financials, 34% gain. All the way down to the bottom where you have healthcare, which is up 5%, and everything in between. So, and you can see toward the bottom, the red dots showing the ones that are below their moving average, 20-day moving average. So 31 out of 44 positive, 13 out of 44 are negative. Okay, this shows, with that negative view, we still had a gain in the S&P 500. I guess you'd have to go back to the first chart. But when you look at, this is a 20-period moving average. This is a weekly chart. So one move equals 1 week, not a daily chart. But when you back it out and look at the weekly view, you can see that it is above its 20-period moving average and continuing to move up. A very strong chart. It has stayed strong for quite a while. So it's gone down a couple of times and touched the 20-period moving average and then bounced off of that and moved on up. So we're at a pretty elevated point right now. Doesn't mean it can't go higher, because it certainly can. When I put this on a candlestick chart, you can see the hollow charts, which are usually favorable time periods, compared to the red candlesticks. A lot of the hollow ones, not very many of the red ones. So it tells you that we're basically in an uptrending market. On a relative strength basis, the NASDAQ 100 is the numerator, the S&P 500 denominator. So when charting that from a relative strength standpoint, when this moves up, it favors the NASDAQ 100. When it moves down, it favors the S&P 500 and the broad market. So you can see during this past week on the very far right, upper right, you can see where it moves up sharply, and that was this past week. So in other words, technology, NASDAQ 100, very much in favor this past week relative to the broad market. And I put a black arrow just to show you the direction of the, over a 30-month period. You can see the direction is basically favoring the NASDAQ 100. This does the same thing. It's a slightly different view. This is the growth stocks compared to the value stocks. New economy versus old economy. 24-month chart. And when it goes up, that favors technology, growth stocks. When it goes down, the market is favoring value stocks. So you can see the sharp rise at the very end of it is indicating that what really was in favor this past week was technology. The S&P 500, which includes both growth and value, compared to, and there are large companies, the 500 largest companies, compared to small cap, and the ETF is IWM, the Russell 2000 small cap ETF. And so when it moves up, it's favoring large cap stocks. When it moves down, it's favoring small cap. I put a black arrow here because over the past 5 months or so, the 5 or 6 months, it has moved in generally speaking, a downward direction, which has favored small cap over large cap. So bonds have gone up at the very end, the very far right, slightly, but over a 5-year period of time, they have gone down. What I did was to put a black arrow to show you, based on today's prices of the long-term government bond, where are those relative to where they've been in the past. So if you go back a little over 2 years ago, you'll see that the price is still about the same as it was 2 years ago. In other words, bonds or long-term government bonds or any kind of government bond has not done much to help traditional portfolios. It's basically during a period where the equities have been strong, has been kind of an anchor holding back the growth in those portfolios. So yeah, not much change in over 2 years now. The dollar continues to go up. It goes up and down some, but generally it's going up, and this makes buying things from a foreign country, investing in American goods and services, expensive. It makes our dollar stronger, meaning that if we're buying things in foreign countries most of the time, the dollar goes quite a ways. So dollar is still strong. Gold Gold has been going up. It did have a pullback this past week. You can see that, a slight pullback. You can see that at the far right of the chart. But that's been, gold has been, it's not at an all-time high, but it's at a high in the recent time period. Silver has also gone up, but it moves a little differently. It comes back down further, and then it goes up. It's more volatile than gold is. Bitcoin had a good week, continues to go up, hitting an all-time high. This is the ETF BITO, but there are several ETFs, and Bitcoin itself is now as of Friday, was up over $100,000. And so, yeah, that's done very well, way above its 20-period moving average. The volatility index, as I said earlier, the volatility index has come way down, which means it shows that equities are basically up. There is not much fear in the market right now when the volatility index falls like this. Asbury Research has 6 indicators, and 2 of those are negative. They've turned negative, and as of Friday actually, and the other 4 remain positive. Relative performance with assets, comparing one versus the other. Stocks, I'm going to look at the ones that are in all 3 categories. The last month, the last week, the last month, the last quarter, going from left to right. Stocks are stronger than bonds. High volatility, high beta, is stronger than low volatility. The broad market, the S&P 500, is stronger than the blue chips, the Dow. Technology is stronger than the broad market. Growth is stronger than value. And then over in the bond area, corporate bonds are stronger than government bonds, and long-term bonds are stronger than short-term bonds. The U.S. is stronger, no country is stronger than the U.S. in all 3 time periods. The U.S. is stronger than some countries in all 3 time periods. Those include Chile, Brazil, Peru, Canada, Switzerland, Hong Kong, Taiwan, Pacific, New Zealand, and Australia. So the dollar has done well, the U.S. market has done well, the U.S. market relative to other markets has done well. So it's basically, we're somewhat insulated from that, but if we were experiencing the market or the buying power of currency in that economy, there are some that are not doing very well. So this is a relative strength chart. So I've been using South Korea as my proxy, and this is the U.S. market SPY, S&P 500, versus EWY, which is the basically South Korea market. And you can see on a relative strength basis, this is how stronger the U.S. market is than the South Korean market. So when it goes up, that's favoring U.S. When it goes down, that favors South Korea. So going back up almost 2 years, you can see almost all of that period of time, it was above the 20-period moving average. At the very end of it, on the far right, you can see the magnitude just in the past 3 months that the U.S. market has gone past the South Korean market. Said another way, if we did use the South Korea market as the numerator and the U.S. as the denominator, it would be going down that degree of magnitude. So I couldn't resist, but the difference between the moving average and where that chart is today, I put a red arrow just to show you how strong the U.S. market is. I think There's a number of countries that are like this in recent times, but the reason I show South Korea is because it shows over a longer period of time a lot of consistency of U.S. strength versus the South Korean market. Okay, gold and silver. Gold has been doing well. Gold and silver have been doing well. As of Friday, compared to a week ago, or actually as of today compared to a week ago, the price of gold is $26.50 per ounce, and the price of silver is $31.32, pure spot price. An increase of 0.8 on gold and 2.7% on silver. Gold-silver ratio 85-1. A monster box of silver, sometimes people buy it in this quantity, 500 rounds, 1 ounce rounds, generic rounds, and that box is $16,245. That includes a $1.17 markup, which has been coming down. It shows not the price, but it shows the supply and demand for silver is actually is favorable to the buyer. So the demand is not as strong, and I think that's because a number of people are not very flush right now for whatever reason, and it's showing up that prices or the market for silver and gold is not as robust as it has been in the past. What that does is bring down the markup, so down to $1.17, pretty, relatively speaking, fairly low. The total price of a round is $32.49, including the markup. This is courtesy of my son, Preston, who's in the precious metal business. So the debt in the U.S. has created a big hole in our economy, and our country long-term cannot grow if we are weighted down with a lot of debt. So they're talking about dealing with this. I don't know how much they're going to cut out of the budget or how much out of the deficit, if we could actually get to a balanced budget. I've not heard the term balanced budget, but they're talking about cutting a lot of waste out and trimming the size of the federal government. Maybe it's possible that we could balance the budget, start to bring down our debt. That would be awesome. That would be a very good thing. And we are not alone. Other countries, virtually every country, is dealing with the same issue that we are on relative terms. So relative to the gross domestic product, which is how it's usually measured. So if you have a stronger market, like say the U.S., gross domestic product, that ratio, if that can start to come down, and the amount of deficit can start to come down, even if it's modest, that would be amazing, because this is going to head us and other countries. I'd say all major countries are in trouble, and it will probably cause some kind of an economic or currency reset if we don't deal with it. So thank you for watching. If you have questions or comments, leave them in the comment section below.